So we all know Tesla on its own right does not pay dividends, but what if I show you there's a way actually you can invest in Tesla and generate massive monthly income using this strategy? And today I'm going to talk how you can do that. We're going to look at a few things here. First, we're going to look at an overview of the fund that you can invest in. Tesla fund you can to generate the passive income. We're going to look at performance. We're going to look at holdings. We're going to look at literature. We also going to look at the way you can purchase this ETF or one fund ETF. So the fund itself is it's a YieldMax. This is a parent company from Elevate. The ticker symbol is TSLY or YieldMax Tesla Option Income Strategy. That's the name of the fund itself. So we're going to look at overview. Current yield at this moment is about 67%. Distribution frequency is monthly, and 30-day SEC yield shows up as 0, and it's because this is synthetic, so it doesn't really have yield by itself. And we look at the fund overview. So YieldMax Tesla Option Income Strategy ETF is an actively managed fund that seeks to generate monthly income by selling or writing call options on Tesla stock itself, which is TSLA ticker symbol, traded on the Nasdaq. But this TSLY fund itself is actually traded on the New York Stock Exchange. TSLY pursue a strategy that aims to invest to harvest a compelling yield while retaining capped participation in the price gains on Tesla. Of course, Tesla goes up, you're gonna cap on that based on options. That's how all the covered call and options, put and call option works. Investment objective. The fund primary investment objective is to seek current income. The fund's secondary investment objective is to seek exposure to share price of common stock of Tesla Inc., subject to limit on potential investment gain. Of course, as I explained there, as the share price of Tesla goes up, they have to sell those put or call options, and of course it's going to limit your potential gain. If it skyrockets to that potential, but also if it goes down, it protects you from the volatility of Tesla stock itself. Look at the fund information. Fund name is YieldMax Tesla Option Income Strategy. Ticker symbol is TSLY, traded on New York Stock Exchange, and inception date was November 22, 2022. Expense ratio, how much you're going to pay by owning this fund, it's about 90.99, over 1%. So of course the 1% is going to come from your performance and of yield, so you're gonna have to put that in perspective and your calculation of how much you're going to get. So if the fund return about 20%, you're going to get about 19%, because there's minus 1% all the time. Net asset at this moment is about 17 million right now, and the NAV is 1616. That's the price, which is about pretty much the same as it's 1617 right now, which is pretty close to the NAV itself, which is good. We look at the share outstanding is about 1,050,000. Premium discount is 0.4%. Closing price is 1617. Medium 30-day spread is about 0.45. Performance. We look at the performance here. The NAV, which is TSLY NAV, is about in a month is 20%. Tesla itself, Tesla stock, is about 19%. So this fund actually has outperformed Tesla. We look at the fund. This is a fund itself, right? This is performance of the fund, including the dividend, because we can see here there's a cumulative performance, which includes all the yield and also the share price of the fund itself, right? We look at it's 220 since November. Tesla right now is about almost flat, but this fund has returned about 2.2%, and we look at the S&P 500 is a minus 0.37%. But when it comes to year to date, right now this fund itself has about 40%. Tesla is about 36.49%, and S&P 500 is only about close to 4%. We can verify this with Yahoo Finance. This is a website, of course, of this is the official website of this fund itself. When we look at the Yahoo Finance, we look at the yield Tesla Max income strategy about 1617. That's the price. We'll look at the year to date. Look at that. It was about 13 and now it's 16%, and they give up the percentage about 32.56%. This is performance, of course. On this website it tells us it's about year to date is about 39. So of course they added the yield of that. If you add the yield, of course the income that you've received or distribution that you've received, it comes to 39. But on Yahoo Finance, if you go there, you'll see it's only 32%. And we look at the bid ask price, it's a 16 to 12. It's a lot of spread. If you look at that, look at the bid is 16 and ask is about 1741. So the spread is very big here. So you gotta be careful when you're trading this. When you're trying to buy, you have to watch this bid and ask, because you can see a difference here, 16 versus 1741. You don't have to be careful on that, so you don't get ripped off in a way. Days range is 1605 and 1627. 52 week is 1330 to 2176. Volume is about 71,000. Average volume is about 29 on a daily basis on New York Stock Exchange. Let's go back to the website. So that's the performance. When we look at distribution, this, because we invest in this for distribution, for income, we want the distribution, want dividend. Have they have they been giving us the distribution that they promised? Yeah, we look at from January, we have February, and we have March. They've been paying a dividend. January, as you say, the fund was only like almost end of last year. So in January they paid 99 cents, you know, pretty much close to $1. And then in February they paid about 90, you know, 0.902, so 90 cents. And of course it was the same for March, about 90 cents. So that's monthly. Of course, if you times that, almost 90 times 12, if they were to give the same, if we bring up calculator, we can see 0.99, or let's say 0.90, right? 0.90 times 12, so you're looking about $10 per share. So share is only $13 to $16. So if you divide this one, you know, by the price of the share, you're looking about 67% annual return if they were to give this. But we'll see if this is if this will be the truth, if it's gonna be the case the whole year they're going to pay this. Did they promise? We'll see that. We look at the top holding. Actually, top holding here, you can see US United States Treasury. There's a Treasury, and there's a Tesla, there's a cash, there's a Treasury. Look at this Treasury, the weight is about 49%. So pretty much all the money is invested in the security, more of a very safe security. Because the reason they're doing this is because this actually is not, they say on if you look at prospectors, actually they mention that they are not actually holding the share themselves. So at the cover call ETFs, the way they do write calls, they actually buy the stocks, right? You can do yourself. You can buy for example Tesla stock, or you can buy Apple stock, and you can write calls, you know, that you can write cover call on them, right, to generate the income. But the way they do this one, they do something called synthetic meaning you're going to an agreement with third party that you're going to do option on certain security where you don't hold this security, but you have a third party that it's kind of holding it for you, but you have the money. You have something called is collateral, right? So whenever things gone up, so they just synthetically get the money. So get the return. These strategies used a lot in a certain company, so you have to be careful now. If you want to go more details and knowing how all that it's been done, you can go on a prospectus, or you can actually call them and ask them. They can give you more details on that. But this option is used a lot. For example, here in Canada, they use this strategy is used a lot with certain funds. Horizon use a lot of synthetic option to write and invest in certain investment. So you gotta have to be careful when you invest your money. You gotta know, is it synthetic? Is it they hold the stock directly, or they use an other mechanism like they use in this fund, right? Because I can tell you synthetic is more, it's not white and black. It's more gray, so there is a danger to it. As long as you invest your money, maybe 10%, up to 10%, don't go all the way, because it's very kind of risky that way with the synthetic investment. When you look at if you look at literature, which is of course you can go on their website, which is elevateshares.com. You can see prospectus and you can read more. You can read summary and all the documents you need for taxation and everything like that on their website. When you look at the purchase option, of course you can use all these US Charles Schwab, SoFi, Robinhood, E-Trade, Ameritrade, Fidelity, Vanguard, and Interactive Broker. So if you of course you can also buy this here. If you're Canadian, you can also use, of course, Canadian brokerage to buy this fund. So yeah, that's it. But one more thing actually I want to mention, or I want to show you here. This is what they say here. Okay. The current yield of is not indicative of future distribution, if any, or on the ETF in particular. Future distribution on any ETF may be different from its current yield. And here they say the distribution of ETF is not guaranteed. Right here, distribution are not guaranteed, so you have to be careful. Right now it shows about 66%, but they might reduce from 90 cents to, let's say, 12 cents, and that yield will change, because they literally put there on their website that distribution are not guaranteed. So if you want to take the momentum and capture this, maybe you can put up to 10% of your money. If you look at this interview, this guy actually mentioned that. He said you can maybe invest 10%, right? Not all in.
Aggressive interest rate and financial advisors inside their overall diversified portfolio.
Yeah, this is a great tool for that advisor or individual who likes to build a basket of ETFs. They want to have some yield. And so swapping out even just say 10% of a portfolio with a TSLY, kind of a holding that's generating higher yields, you could almost double yield. So if you're looking at 4%, you just throw in a slice at 10% that's generating a higher range. You could double your rate, you could double your dividend rate, right? So it's a really good tool for investors who don't want to take all the risk of the underlying. And let's face it, you have to be comfortable with the risk of the underlying when you're running a covered call strategy. So we know Tesla has volatility, so you have to be comfortable with that, but you could limit your exposure to that. The other thing about it is, a lot of folks talk about the 60-40 model being dead. The last 2 years certainly have supported that. So what do you do then? Well, add alternatives to your portfolio. Use this as a piece of your alternative allocation, because really, essentially, that's what it is, right? Harvesting volatility is not a traditional investing strategy, but when you could generate yield on a holding like Tesla, you can add it and kind of diversify your portfolio. So now your primary means of growth is really option selling versus, say, stock or bond appreciation.
And we're gonna.
So that's a CEO, that's a manager and a CEO of this company. Of course, he's telling you, you can use this in two ways, either to diversify your portfolio, which you can cap up to 10%, right? He mentioned that. So if you put 2 to 10%, that's okay. And also because bonds, of course, right now they pay literally nothing, so you can use that one. You can use this covered call ETF as a means of generate the portion of bonds that bonds used to hold it in old times. Right now, because bonds of course pay very little, so those are the two things you can use. You can use for diversification, or you can also use to give that income on your portfolio, right, in your portfolio. Or for someone who is retired, you can use maybe the whole thing to, I mean, or other type of covered call which does hold stock directly to generate passive monthly income, you know, like YieldMax, like HDIV. On this video I talk a lot about this type of funds. Look at link below, look at my videos, you know. I have a bunch of funds, you know. You know, there you have it. This is the thing I wanted to bring to you, how you can invest in Tesla and generate income. So if you have any question, make sure you leave a link, and it's your first time, make sure you subscribe. To meet again. Bye bye.